Good morning. All the cool stuff seems to happen while I'm sleeping. We just got more powerful action against this blue line, and I've had questions about what these lines are. People are confused. These are not normal trend lines or support lines. So I'm just going to do a quick video here and explain our bull lines, our tangent lines, and explain what this model is, because these are not support levels that you see on technical analysis. This is a cyclical model, and these are mathematical tangent lines on cyclical waves. So this is Brian Lewis with MMT Investing, and things just changed. Oh, there's my rhino. Okay, so this green line people have been asking about a bit, and I guess I'll cover that one first. So this green line and this blue line here are what we've been tracking this bull move with, and the green line always smashes that like button right now to help me out with the YouTube algorithm. So okay, so this green line is our bull run support line here, just like we had in this cycle back here, and it doesn't go from the bottom underneath everything. It goes from the consolidation zone here, because that's where our tangent lines switched. So if you see these tangent lines that cut the waves in half and they go to the consolidation area, that is the middle support line of the wave. That's the middle tangent line that goes from end to end of the longer wave pattern. And that is what this green line is. And in our last cycle, that was the line that supported the last bull trap until it turned over. And I've been calling this line the bull trap line in all my videos, expecting another turnover. And this line is a divergence line. And we got, okay, so let me get in here a little tighter and talk about this blue line and what's happening. This blue line is not a support line, and I don't expect the bull activity to get above this line and start using it as support, because it's just too steep of an angle for a bull kind of move. Like the bull market support line should be above this yellow line. If the bulls are looking for kind of a cup handle support area, it's this yellow line that should be the support before we get a bull market. And this support line for this wave here should drop out at some point. And I've been on the cyclical model calling every single top that we're hitting as like, okay, it's probably going to turn over the cycle now. And I stopped calling it. So probably now when I stop calling that top, it will probably do it. But we got this extended wave here, and it's very dramatic. It's super bull territory, and the volume has been decreasing the whole time. The volatility has been decreasing, and the chart has turned more and more green on the trades. And so I guess I just point out the consolidation zones here and kind of how they work. So when we get down into these reversal points, we get this pattern where it consolidates down and then it reverses. But the tangent line on the next wave, the tangent line on the next wave is at the end of the consolidation zone. So here on the big one, you can see we started to consolidate, and then we got our consolidation to that point there. And that's why I have the line here. And then as you can see, we get the majority of our activity on the bull side of that line. And then when we cross over that line, we get these sharper kind of reversals, and they're all hitting this line. So I had this line set up early, and now we're hitting it from underneath over here, which is really interesting. But so after this consolidation point here, this is our bull support tangent line right here for the next wave. And this area here, I call this area the speed wobble, because it's like when you're coming down a wave or like a surfboard ramp or a surfboard ramp, like a wave or a skateboard ramp, and you have too much speed to control yourself at the bottom, and you just get these wild movements. But you can see we swung out to the edges of the consolidation zone, and then we reversed back before we found our tangent again. So this area is kind of wild reversal activity, but it gets down here and sets up the corner of this line. And then the next time that we try to break the bull support, this is what bounds that movement down before we get on top again. And then here, this line crosses over, and now it's bounding our upwards movement a lot of times. 4, 1, 2, 3, 5 or 6. Yeah, like 5 or 6 reactions, like right on this line. And that's the same line that we've been getting reactions on the whole time. Basically, when we're on the wrong side of this green line, we get reactions against the blue line. And I've been calling this area out of bounds this whole time because we're on the wrong side of this green line getting reactions against the blue line right now. And then the bull and the bear case from here. I guess let me just draw some quick Elliott waves. I did a big Elliott wave episode, but my model was not an Elliott wave model to begin with, but the Elliott wave, all the Elliott wave theory fits exactly what's happening here. So I'm completely happy to call everything Elliott waves right now. But yeah, we get this ABC correction wave here, a big Elliott wave. And then you can see the B is also this bull trap, and the bull trap you get a 1, 2, 3, 4, 5. You get an Elliott 5 wave on the bull trap, and then you can see here it's the same thing. And if you circle these double peaks and just aim for the second one, you can get the 5 wave pattern, which is 1, 2, 3, 4, 5. We get the Elliott 5 wave here. And then if you go out to the larger time scale, that's a very obvious bigger Elliott wave where you go A, B, C, correction wave. And then you can see that the bigger wave is that tangent line on the smaller wave. And then if you zoom in, so the A wave of the big one is the tangent line of the smaller one. And you can see this red tangent is the A wave of the big one. And then that repeats down as you get smaller too. This part is too small for me to get in here and draw waves on. But as soon as you get this B wave that has the 5 wave on the smaller time scale, you can really see the cycles on top of cycles pattern. And you can redraw the cycles on top of cycles as we go forward too. I'm not going to get into all that. And these consolidation waves are the more complicated, the ending diagonal kind of pattern, where you get like the 1, 2, 3, 4, and then you get like the 1, 2, 3, 1, 2, 3, 1, 2, 3 consolidation on this thing. And yeah, that's where we are. So this looks like the end of a 5 wave, but I mean, where does it end? I don't know. So we'll see. When that 5 wave ends, we should start. That's our B, A, B, C. So the 5 wave is the end of our bigger B wave, and you can get more complicated on top of this with 2 different levels of cycle movements and try to predict what's going on. And also these tangents. Let me talk about the outer tangents. So you see that the big wave here is the central tangent of this smaller wave here, right? So you get this central tangent, but it also crosses the corner of this. We're getting this pattern where the B wave hits this tangent, and then that tangent is splitting the waves, and we're getting kind of extended 5 waves out past the tangent. It's kind of going asymmetrical to the upside, and then it comes back down to the tangent here and consolidates along the tangent. And so we get the smaller wave tangent here, and then we get this tangent that's the tangent of this wave here, and then potentially we can try to set up a bigger tangent out here for the yearly scale. And I've been talking about a larger scale kind of up wave. We could get another B type wave up towards the presidential election that acts along this tangent line. And so try to set up cycles inside of cycles with these tangents and these bull support tangent on the B waves from the consolidation zone. And then this line is not really a tangent line. It's just a line I noticed that's getting reactions when we get away from the tangent line. And that is just a divergence line. As we diverge away from our tangent, we get reactions along this line, and it's getting a lot of hits. So I think it's a good line. But don't expect the blue line to become support, because it's not a support line. These long-term bull market lines off 2018, 2008, and 1982, the three big crashes that set up our whole everything bubble, these are big support lines that we have been breaking and back testing. And when we break them, we do an immediate back test, and then we sweep up and do a double test. And that's the 5-wave pattern, is the double test. And same thing here, we back test it immediately when we break it, and then we sweep up and we double test it. And I have all the tangents not on the top of the peaks, but drop down onto the shoulders where you get the most reactions, and then you can see the activity a lot better than if you stick the lines across the top of the peaks. So that's an overview of the tangent lines. I don't know, I guess I'll call this thing tangent something. But this is a mathematical cyclical model that's looking at the credit contraction cycle. This is not factoring in fundamentals at all, and it's not technical analysis, this wave analysis. And it wasn't really Elliott wave analysis, but the Elliott waves completely work with this model. So I'm happy calling it Elliott wave at this point. But this is just sort of a mathematical derivative model looking at the contraction of the monetary expansion of the currency system. And we reached a point here where the currency, the monetary system, this is the worldwide Eurodollar monetary system, couldn't expand anymore. I mean, we had 40 years of expansion with increasing steepness up to this point, and then bang, like it hit this blow off top, and now we're in contraction phases, and we're unwinding these bull market lines from the 2018 crash, from the 2008 crash, the 1982 crash. And as soon as we get underneath the 1982 and back test it, then we're setting up a long-term bear market, and we can unwind the whole bubble shape, and then the outlook for a bear market over, who knows, 2 years to 20 years or something like that. Like Japan was like 20 years. The Great Depression was like a couple more years after the bubble unwound. And that's the cyclical model of a credit contraction bubble blow off. It's like a sovereign debt bubble reversal pattern, and it just has to do with the monetary contraction. It's a mathematical monetary contraction model. This has nothing to do with the health situation, nothing to do with the fundamentals that people are talking about. The fundamentals are a result of the monetary contraction, like how much money is available. The entire private sector is pro-cyclical based on the monetary system. The health thing is a complete wild card that's not being reflected in this. It's not changing this at all. I don't even see it here. I mean, if the health thing was kicking in, we wouldn't be up here above this support line on a cyclical wave spot. I mean, if the health situation was dragging this thing down, this whole model would be like drooping and pulling down. It's not. So yeah, so this is cyclical wave analysis, pretty much. And those are the lines. And this is not investment advice. Please hit the like button to help me out with the YouTube algorithm. And happy trading.